This week on the podcast, who thought that KFC and a sauce pot could be so interesting? Keep listening to find out what we're talking about. Welcome to the Profit Cash Growth Podcast. This is the podcast for 6 and 7 figure business owners who are looking to grow a financially successful business. My co-host, Claire Hancock, is a finance director, chartered accountant and entrepreneur. And every week, I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. So, Claire, this week, before we move on to this week's news story of the week, I want to ask you a question that I heard on a podcast to see what your response would be to this. And it was a question posed by the Daily Mail to people, which is, would you take £1 million in cash today or £1,000 a week for the rest of your life?
Oh, I know.
If you had to take one or the other.
Without a shadow of a doubt, I would take the £1 million.
Okay.
Because
expand. Why?
We have a property portfolio just under 5 million, and we have put roughly £750,000 of cash into that, and that generates way more than £1,000 per month.
Per week? I said £1,000 a week.
It generates more than £4,000 per month profit. And that's based off an initial 750k of capital. So therefore you could make way more.
Mm. You've got all the
answers, haven't I?
Got all the answers. Well, that was a boring conversation. I was hoping you were going to go down the other route. So I literally wrote here, I'd take the million because I know that 1 million would buy me roughly 3 million of property. 3 million I know would generate 2% of income, which is £60,000 a year, which is more than £1,000 a week of income. Plus I've got my capital, which will remain and hopefully grow.
And plus you're protected from inflation. £1,000 a week in 30 years' time is going to be like a penny sweet, isn't it?
It's an interesting question. When do you
think Fredo will hit £1,000? What year?
I don't know.
I'm going to ask Claude.
So what you got then?
Well, it's in about 3,000 years, which, obviously we're not going to live to see. However...
What was the purpose of this? You were trying to find out when a Fredo might become £1,000 and you found out it's 3,000 years.
At some point, a Fredo will be £1,000, won't it? If Fredo survives.
Why didn't you just start with a tenner?
Well, yeah, I could have gone for something a bit more sensible, like £1, couldn't I?
But it'd be a tenner in 100 years. It would take
about 100 years for it to get to £100 if they reversed the current shrinkflation and went on today's inflation rate.
Right.
Because it's reduced in size and the price has gone up.
I think you're an absolute maniac.
These are the things that I think about.
So, of the 7,000 people that you got polled of this, what do you think the percentage looks like? So, what percentage do you think said they'd take the million lump sum?
65%.
Close, 55%. And weirder than you might think, that doesn't mean 45% said they'd take the 1,000. Actually, 41% said they'd take the 1,000. The others said they didn't know. Isn't that insane? You asked 7,000 people and 4% of people actually answered that they couldn't even make a decision. That's how...
Yeah, I think that's
by which point,
doesn't it?
Both options have been taken away from them and got no money at all being left. I mean, that is mental. How do you think it broke down by age group? So it was higher for younger people, 18 to 24, which I would...
What?
What's the chance of this?
No,
what?
Because the younger people have got more years to live.
Yeah, younger people said they'd opt for the £1,000 a week. 66% said they'd opt for the £1,000 a week, while only 17% of those aged over 65 said that they would, because they've not got a lot
closer to death. Yeah.
What I think's interesting is that you've obviously made the decision quickly, and you've done a load of accounting in your head and thought, right, I take the million because I can invest it, I can get that same money, and then my capital will grow. But I suspect that the 55% of people that have said they'll take the £1 million is because they're about to buy a house and a Ferrari, and that's it.
Yeah, or we're just thinking about how many takeaways they could get on £1,000 a week.
And they'd have no money left.
And
then they'd wish they took the £1,000 a week and somebody given them the discipline.
I literally think that the decision for the majority of people on this would not have been around investment, and what they could turn it into, it would have been whether they can quit their job or not.
Correct. Do you know what? Actually, they cover this in this story, that actually they've said in 20 years' time, the £1,000 sum will only be worth £609 a week.
Yeah.
So there you go. Interesting story. It's not even a story. It's just, that was the shit chat this week. It's exciting, isn't it?
That is our news story.
No, it's not. Our news story is about to come. So this week, I know you love this every year that we do this. This is the top 10 selling cars in the UK, Claire. This is your favourite episode of the year, isn't it? Where I quiz you on what the top 10 selling cars are in the UK
and
so far.
And I hate this because cars...
Because you have no idea.
I know nothing.
You did really well
cars.
last year. In fact, you did so well last year. It was unbelievable. So, do you know what? There's been a lot of change this year as well.
Has that? Okay.
Like, there's been, just to give you a little, what's the word?
Snippet?
A leg up, snippet, whatever. Limp. There has been lots of completely no change and lots of complete change. It's really interesting.
So, hang on, let me get this right. One of two things happens. It stays the same or it changes.
Yeah.
Yeah. Weird that, isn't it?
And it's a real mix. So last year, I don't think there was any electric cars in there, just so we're aware. Just to make sure you're looking for the right things. Obviously, electric cars are quite niche and like rich people have them and all the rest of it. It's not like a mainstream car. So like normal people aren't necessarily buying. So don't go wild with this, just to give you a tip. But so top 10 best. Do you want to start with the number one or do you want to work your way up? Shall I just say if you can get 5 that are in the top 10,
can
then
I just
you're doing
name
well.
them? I don't have to say like where I think they are.
Yeah.
Right. The Qashqai.
I feel like you've got to get the number one because you I think you got it last year, all you do is talk about it all year long. So
Qashqai.
So the Qashqai has always been a real popular car. It used to be like number 1 all the time, whatever else. It's in there. It's number 4 this year. They've sold 18,558 so far in 2026.
Ford Focus or
nope.
Ford Puma.
The Puma is number 1.
Yeah,
it was number 1. It was number 1 last year, wasn't it?
Was it?
Remember, you were dead surprised. You were like, "I've never even heard of that car," and then you see it all the time.
No, because I love the Puma. I think it looks like
call it a Puma.
A little bit of an in-joke there.
The Puma.
I love the Puma. It looks like a beautiful car for like a Ford car. It's very well designed.
I think that is like the new Focus, isn't it?
I'm going to say the Tesla Model S, the cheaper. Is that the cheaper one? No Teslas in there. That's interesting.
So far.
The Yaris.
No.
Toyota Yaris doesn't make it. No, hang on. Is that the one that the Uber drivers have?
No, that you're talking about a Prius. Toyota Prius. No, that's not in here either. No. The weird list, actually, isn't it, sometimes?
Okay, Audi Q3.
No, don't. It's not going to be prestige cars. It's always going to be like mid-market, isn't it? Because this is like highest volume of cars sold. So think about an average person, what they can afford and what they buy. They wouldn't buy an Audi, would they?
Right. I hate to break this to you.
You're not a car person.
I'm not a car person, and I've only ever bought luxury cars. I'm literally.
That's not true because you had a Vauxhall Astra.
That's like a perfect example. My driving test.
And then you had an Audi Q2, which is like. Yeah.
You've just said I'm not allowed Audis. Okay. A Vauxhall Corsa.
Right, now we're talking. Now we are actually talking. Number 5, just below the Qashqai.
Kia Ceed.
No, that's not. It's the wrong Kia. Think about the Qashqai, the big Kia version.
Oh, I don't know what that's
called. It's called the Sportage. So that's number 2.
Oh.
Number 2, Kia. So Ford Puma, Kia Sportage, Qashqai's 4, Corsa's 5. Classic Volkswagen Golf. I didn't even know that was still going. That's still selling at number 6.
I'm so surprised that makes the list because I always think it's a very basic car for the price. I don't understand why people buy that over like a Vauxhall Corsa or something like that. It just feels like the price is just ridiculous for a small car.
It's a different car to a Corsa. It's the next step up in it. So it's a bigger car. It's a more family car. Volvo XC40. I'm not even sure I know what that is.
Yes, that's what my dad's got.
Okay, that's 7. That does well. MGHS, that's 8.
Oh, my sister had one of them.
Okay.
Oh, look at this. I know all the cars. Yeah.
Mini Cooper, number 9. And then a Volkswagen Tiguan is number 10. Really interesting. Now, the only one that I've missed off there is number 3, which this is the surprise that's in here. Because you notice how there's not a single electric car on there.
What's it going to be like the ID?
Number 3 is the JQ7.
No way.
Yes. The 3rd biggest selling car in this country is that massive Japanese monster.
I have seen them everywhere in the last 6 months.
It's the Chinese Range Rover copy type thing. That's what they basically completely copied the style of a Range Rover, don't they?
They look good though. They do look good.
Oh, they must do. I mean, massively big. Like it's too big for me to drive. That type
literally, thing. I'm not surprised.
Smashing it.
Yeah.
To be the only electric car in the list. And to be number 3 in the whole petrol list is big.
To be a brand that 12 months ago nobody had heard of. And now number 3 best-selling car in the UK. It just shows you what is happening with imports. And they are literally like how cheap they can make things not in this country. The car industry in the UK is screwed.
My God.
Calm it.
Now I know why. I'm just looking through all these. So the Puma's 27 grand. The JQ7's £30,000.
God, they're like
£30,000 for what is effectively, they're calling it, they dub it the Temu Range Rover.
I was going to say they're like Datchas, aren't they?
It's massive.
Like just so cheap.
So cheap. So basically, it's taking on the world of Range Rover at a third of the price, basically, isn't it?
It's mind-blowing.
Wow, now I know. So basically, it's exactly the same price as the Qashqai and the Sportage and all the rest of it. So that's why it's in there. And it's electric and yeah, wow. Okay, I know you love that, but bit of fun. Let's move on to this week's deep dive where we're really... we've gone from fun to really, 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 really... I was going to say dull, but I find it interesting.
This is brilliant for businesses.
Fair enough. So the deep dive this week, we're talking about... Who thought we'd ever be talking about KFC? We're calling the episode the KFC Sauce Pot VAT Case and Why It Matters. Who'd have thought that KFC and a barbecue sauce pot would have made it onto the podcast? But what on earth are we talking about, Claire? This is fascinating.
Right, basically there's a very, it's now become infamous in the accounting world, called Queen's Court Limited versus HMRC 2024. And that gives you an idea of how long it takes these things to get through the court cases, because it's only just come to light and been announced now. Basically, Queen's Court operates KFC franchises, and they currently, when you go to KFC and you get a takeaway, hot takeaways are any hot takeaway food item has 20% VAT on it. If it's a cold takeaway food item, then it doesn't have VAT on it. But there's a rule that when you bundle things together, then generally the main purpose of the bundle, you take the VAT rate of that and apply it to everything. So where KFC have been selling meal deals as hot food and selling additional sauce pots on top of that, they were having to bundle the sauce pot into the meal deal and charge 20% VAT.
Yeah.
They challenged HMRC on that and said, no, the sauce pot, we sell those individually. They are their own.
Well, you're missing the really interesting bit about this, because this is like the little man sticking head. KFC didn't challenge it. A single franchisee of KFC decided to go against the grain and just try and claim his VAT back on it, didn't he? For 1 year, and it was about 100 grand.
That's why it's Queen's Court Limited.
Yeah.
Because they've got KFC franchises.
Yeah.
It's not just like one.
Well, no, but
one
a franchisee.
Yeah.
You might have a handful, but whatever.
But basically, they challenged it and they said these sauce pots sell on their own right. They are a cold food item. They're not. Although they might be the fact that somebody wouldn't buy the sauce pot without buying a food bundle, the fact is they are their standalone item, and we think that they should actually be 0% rated, and therefore we want our VAT back. And they went back and they claimed £100,000 in backdated VAT claims, and they won the court case.
Well, that wasn't the story I heard. So the story I heard was that
£600,000 of revenue.
Well, the story I heard was they put a claim in for the 100 grand. HMRC looked at it and went, yeah, fine. And the 100 grand just dropped in their bank account, right? Then they thought, well, that's interesting because that's just last year's and we can go back 5 years. So then they decided to go back and claim like £600,000 worth of it for the last 5 years. And HMRC this time went, oh, no, we're not having that. And they kicked it back. At which point, the little man, so to speak, decided to take them to court over it. So
you can go back 4 years worth of your VAT returns. So it would have been 4 years that they would have done this for. But yeah, it was total. There are going to be thresholds at the end of the day as to what you can do. So to give you an idea, if you're if you have a backdated claim worth less than £10,000, this is just a general VAT rule, then you can just stick it through on the next VAT return. If it's over £10,000, you must disclose it to HMRC. So you don't put it on your VAT return. You actually write to HMRC and you say, we've made a mistake, or we declared our VAT returns wrong previously. Here's all the information. And that would be the point that then gets looked at by a person.
Yeah.
But £100,000, to be fair, although that might seem wild, it's not unheard of. We've worked with businesses that have got legitimate reasons. You know, somebody's just processed something wrong for a long amount of time and it's only just been picked up, that type of thing. So 100k, not that much of an issue. It's if it was like 500-600k, then obviously that's going to go to quite senior management in HMRC.
It raised some alarm bells, and all of a sudden they decided, no, we're not going to. But it's interesting that HMRC can do that, isn't it? That in one breath they can just go, yeah, that's fine, and then when it happens to be a slightly bigger amount because it spans some more years, they can just turn around and go, no, we've changed our mind.
Yeah,
and they can do that, can't they? Clearly they can. I find that bizarre. They can do that. It's either right or it's wrong. How can they say it's right and pay the money back, and then the next time you say no?
Well, because HMRC have the right to challenge any tax return that's submitted.
It's the Wild West, isn't it?
Yeah, it is the Wild West. It is ridiculous. So why are we talking about this? Well, this whole belief around what ancillary services is kind of the defining thing here. And actually, this doesn't just apply to KFC.
No.
This could apply to literally any business.
I find this interesting because, like, you've had this, you get this a lot. Often when you get new clients that you rifle through their accounts, you're doing some tidying up, and then you just find like 30 grand here, 50 grand there, 60 grand here, because you're just like, oh, you've been treating that particular product. And it's like it's not like, oh, their entire service. It's like there's a part of one of the services, there's a part of a product, and it's been treated by their previous accountant with the wrong VAT treatment or something. And all of a sudden, like, not only you sat on like something this year, but then you backdate it, and all of a sudden they have this cash influx of like £50,000, and you're like, yeah, I think I paid for myself already. Do you know what I mean? And it's like, it happens so much, doesn't it?
Do you know what? We had this twice this year alone, where we've claimed back literally over probably £3,000 worth of VAT. One of them was £6,000 and the other one was £3,500.
Quick question. Do you trust the numbers your accountant sends you? Or in fact, are they even sending you what you need at all? If your business turns over £1 million or more, you're already in the top 10% of UK companies. But here's the problem. Most accountants are built for the other 90%. They're built for compliance, not for businesses making big decisions on tight margins. So if you've stopped trusting your numbers enough to make confident decisions, head over to profitcashgrowth.com and book a discovery call. Let's get your business back in the room with people who actually understand it.
One of them was actually a business that came to us, and they worked with a consultant that we have a connection with as well. Now, they had been processing the invoices from the consultant and not claiming any VAT. What really just made me so literally like fuming about this was the accountant that had been charging the business to do the VAT return is the accountant for both the business and the consultant. So if that accountant had just bothered to look down the VAT return and said, like, it's just really simple stuff that every time you do the VAT return, you check the zero rated lines just to make sure nobody's made a mistake. So you check everything that's zero rated that you're not claiming VAT on. And these two numbers stood out. I was like, I know that name and I know that they're VAT registered. Why are they not claiming VAT? So we went back and it was over £5,000 worth of VAT that we could claim. And it was just really frustrating that this accountant had been charging the business to do their VAT return. And if they bothered to look, they also would have known like that both these businesses were VAT registered and there should have been VAT claimed.
What I love about like watching like your type of business and your clients and various other things and the stories you tell me when we're at home and various other things, it's just like, I just love the fact that like accountancy and competency is just
those two things are not linked.
Like it's just rife and normal, and like there's no comeback for the business owner. Like the accountants, they can't ever go back to the accountant and say, oh, you're incompetent because you didn't spot this. It just doesn't happen. So it's like this just like goes back to that whole thing about why it's so important that when you become a complicated business, like over £1 million, you do become complicated, and like actually you just don't even realise that this money's potentially there because you're just not getting good advice, or you're just getting incompetent accountants who are doing what they do with 90% of their business, whizzing through the numbers because... And
like, again, we onboarded a client...
Don't blame them because they're probably not paying enough. You're probably paying, £500 a month to your accountant, so they're going to whiz through your numbers. They're not going to do it properly.
We've just onboarded a client and they have been processing Go Cardless fees and Go Cardless fees have got VAT on, and you just have to log on to the Go Cardless website, download the VAT invoice every month, 20% of VAT, and there's quite a lot of money. I think it's around £3,000 for this business that we've just spotted that, obviously that's paid for at least 1 month of our fee, but it's like this isn't like
they're now claiming it ongoing, so they're now £3,000 a month better off.
This isn't really technical accounting. This is just like having a little bit of curiosity to look at a number and be like, I wonder what is in that number. So when you look on Xero and you just see this list of numbers, having a bit of curiosity to look in and have a look at the transactions, and then you just apply your knowledge. We use Go Cardless in Profit Cash Growth, so I know that Go Cardless has got VAT on. So it's just those two things combined. I looked at that and immediately said, why is no one claiming that?
Yeah. And you can do that, like, obviously you can make sure you've got a really good accountant or finance team that's doing this for you, but you can also be good as a business owner and just like make sure you know yourself what you should be doing with your individual products.
Look, there's an element
of
options. You've got to be curious. You need to have an accountant that's really curious and just wants to like dig in and really know your numbers, and then you've just got to have a bit of experience. I think that's what it comes down to. The more different businesses
things
you
because
see,
you've seen them in other businesses similar sizes.
And that is a nice segue back into talking about KFC and why we're talking about this today, because it's this whole concept of ancillary services that has been generally accepted as accounting law, to be fair. This has previously been tried in other cases and things like that, but this recent court case overrides those previous situations. So in the KFC situation, it was specifically the boneless banquet, which included, Simon, what's in the boneless banquet? This must be one of your faves, right? You love a bit of KFC, don't you?
I'm quite partial to a bit of bone, to be honest with you.
Oh, not the boneless type.
So, okay. But it will. Let me guess here, because just for fun, it will be the chicken strips. It will be the poppers or whatever they call them, like the popcorn chicken or whatever.
This is just for one person.
Oh.
So it's hot chicken product, fries, a side dish, a drink, and a dip.
Okay.
So they were all bundled together, and because the hot food would have seemed to have been the primary sale, therefore everything would have had 20% VAT. But they've been able to go back and say that the dip shouldn't have VAT on it.
Right, got you.
Now, interestingly, if you think about like McDonald's, for example, when they are selling, this could apply, for example, to Happy Meals. When you get those little fruit bags in Happy Meals, that fruit is probably going to be 0 rated unless there's some weird and wonderful rule about prepared fruit potentially, but I don't think that's the thing. I expect that the fruit is going to be 0 rated. Potentially, the books that they also put in there are now also 0 rated as well. Yeah, you know, when you get Happy Meal, you can get a toy or a book.
Or the toy. I didn't know you get a box. Yeah. Whatever the thing is, you get with it. Okay.
So
but they don't charge for that, though, do they?
No, but it is a standalone item that could have a value and a price associated with it.
But is that allowed? But if they've never sold it standalone,
yeah, McDonald's start putting them on your menu.
Yeah, that you would do.
You just
sell
go
them,
in, as a bolt onto any meal.
So they look like it, yeah. But they don't do that. I'm surprised they don't do that.
Yeah.
It's the kind of thing you'd expect them to.
So you can start to see how when you know about this whole thing about connected services. So a couple of other ideas that I was just trying to think about other businesses that might have this. So obviously there's a lot of stuff to do with food and beverage, because food items in particular, there's a lot of different VAT rates of food items. So you've got meal kits. You know, if you're, for example, selling cake boxes, like bake at home cake boxes, you're going to have like your raw ingredients like your flour, sugar, eggs, anything like that in the cake box is going to be 0 rated. But chocolate and luxury food items are going to be like 20%. Marshmallows, all of that type of thing. So you probably would have bundled that all together and it would have been 20%. But actually now you could potentially split those out. I've got in here bakery food deals. So when you're buying like a meal deal at lunchtime, potentially, it's going to have some element of hot food in it. But again, all comes into the same sort of thing. Food hampers, massive one is going to be food hampers. Without a doubt, if you get a food hamper at the moment, most of it in there will just be at 20% VAT for the entire hamper. But now you can break all of those items out.
Interesting.
Thinking about if you put insurance onto any of your services, that type of thing. So potentially, as an accountancy firm, we might also sell a bundled product which includes tax insurance. If you sell any sort of journals, information, books, anything like that. So, for example, if somebody comes into Profit Cash Growth, if they also get a Profit Cash Growth book as part of their sign-up, we could potentially split that out as well. So anything that's bundled into a product, you really need to think and say, has this got a different VAT treatment to everything else? And now you can split that out.
Interesting.
So what I would say is this change is actually humongous from an accounting perspective. I know everybody else is probably thinking, Claire, shut up, this is not that interesting. But this is really, really super exciting in the accountancy world. What is going to come out of this is there's going to be so many adverts out there. These no win, no fee, will claim you back all this VAT that you could have got, companies like popping up left, right and centre. If you think you've got a claim, speak to a specialist. Do not go down this route of no win, no fee. Speak to a specialist VAT accountant and get some proper advice on this, because you can put your claim into HMRC, it can be paid to you, but then later challenged. Likewise, there is the potential that at some point this could be overruled. So it's not a guarantee. Just because you've got a bundled product doesn't mean that you can go and claim loads of VAT back. It really does depend on your specific circumstances.
Yeah.
What this court case has done is opened up the gateway to a lot of potential challenges, and you just need to establish whether your business sits in that potential challenge category.
So this is really interesting, because like Domino's would be like the biggest one is where they put the little sauce in their pizza box. Like, I guess they've always not been able to do anything with that, but now would they go back and like,
potentially.
God, that could be massive. Can you imagine how many that is? That's just wild, isn't it? But okay, and you say that like it's not a given, like they could just change their mind on this, you think? Or would they have to like rewrite law to try and stop the loophole again?
Yeah, so look, I mean...
Really hard, because they're not going to allow this to...
It's court at the end of the day. You know, this isn't like tax people deciding, this is like actual court law. So it went through the first tier tribunal and HMRC won. It went to the upper tribunal and KFC won.
Yeah.
So
can it be appealed by HMRC again?
There is one more layer of court that it could potentially go to and be overturned. But I'll be perfectly honest with you, cases like this sit around for years and years and years. There's another famous one to do called the Sonder case, which is to do with rent-to-rent serviced accommodation businesses and whether they can use this VAT loophole scheme or not, called Tom's. And honestly, I think that this will sit around forever, because what this does is it creates this element of risk. So anybody that was captured by that in our business, we were saying to them, look, this court case is ongoing. It's probably going to go on for years now. Our advice to you is that actually you don't use the scheme because it's just such an unknown and a risk to your business. Yeah,
because if you suddenly go without the VAT and then you find you've got to pay back 7 years VAT, that's far worse than continuing to charge it to find out in 7 years' time that you're comfortable going back and claiming a load. So you're actually right, probably won't open the floodgates, because people still sit on the balance of risk. I don't want to be that one that has to have a massive tax bill in 7 years' time because I'm not sure where I'm doing it. I mean, it's just bloody horrible, like the tax. I mean, I'm lucky that in our businesses, it's much more straightforward. I mean, these food businesses and fast food, God, it's any food business is horribly complex. Any sort of supermarket business, any e-commerce business, because every individual one, you're making an interpretation on this stuff, and that's how tax law works, based on interpretation. And you're like, what the hell?
Yeah, it's really confusing.
Part of me would be like, I couldn't sleep at night thinking like, you can never sleep at night being sure that at some point tens of thousands of pounds of VAT repayment might not hit your business, and you've got to think about how on earth to ever pay that back.
Yeah, it is.
It's just it's not worth the risk, is it? It's just terrible.
But look, I think what this does highlight is that even when you're in really big businesses, somebody like KFC that has got very deep pockets and has got access to all of the best tax advisors in the world, that this has not been challenged previously. And what this highlights is the need for fresh eyes constantly, fresh eyes on your business, fresh eyes on your taxes, to, just for somebody new to look at this and say, oh, do you think there could be an opportunity there? And
it's also fair on both sides, because the amount of tax in all sorts of different walks of tax that people pay that they don't need to pay is massive, isn't it? It's absolutely massive, because actually, like we always say, like, you have an obligation to pay every bit of tax that you should pay, but not a penny more. But a lot of people pay probably more tax than they should because they don't know.
And do you know what? The reality is, most people that come to us, the VAT opportunity is with missed expense claims. So they're not claiming VAT when they could. That's actually what we tend to spot. It tends to be far more rare that there's something to do with your turnover and you're not charging the right VAT. But if you're selling food, if you're selling like digital services, if you've got some physical products, some digital products, you're selling books, anything printed, anything like that, there is probably an opportunity to have a look at that, particularly if you sell to children as well. There's lots and lots of weird and wonderful rules around children that could also come into it as well. So, I
think it's horrible when you start to have an international business. Well, we've seen this for our software company. It's like, if the buyer is residing in the UK, you're charging VAT on it, but you need to have a system that when the buyer resides overseas, that it doesn't charge VAT on it. And it's like
it's really
a minefield, and it's painful, and it's difficult to set up correctly and make sure it works robustly all the time and all the rest of that.
So look, as I said, do not go to a generalist accountant and ask about this. By all means, go to your accountant and ask the initial question, but do not let your normal year-end accountant advise you on this stuff. The chances are that they just do not have this in their wheelhouse. You really, really need a VAT specialist. If you're going down this road and you're going to backdate a claim to HMRC, getting proper specialist tax advice is what you really need. I cannot stress that high enough.
Excellent. Always like a good VAT story.
Yeah.
This is nearly as juicy as the old Jaffa Cake one or the Greg's one.
Greg's sausage roll.
They were the best, weren't they? Is it hot? Is it cold?
Got an even juicier
Who knows?
Profit Cash Growth Extra this week, haven't I?
Okay, let's move on to Profit Cash Growth Extra.
So we stumbled across this
What?
fascinating, romantic line in bed last night on the Times app.
Oh my God, you absolute loser. You're what? You're doing the data thing.
Yeah. So Profit Cash Growth Extra this week. We have a subscription to the Sunday Times and we get an app with it.
Well, we get a subscription to the full Times because as part of it, you get the digital, all the Times news in, because you can't trust any news, can you?
Another bundled one, we get the physical paper, plus we get access to the app, different tax rates.
Are they?
Yes.
There you go.
So anyway, we digress there.
Yeah.
And if anybody else here subscribes to the Times, then actually there's a really fascinating section of the app that we stumbled across last night called Times Data. And it basically just gives you these weird and wonderful statistics about the UK and also just generally the world economy. But there's quite a big section focused on the UK.
It's just like graph after graph after graph. There must be 100 different graphs of
unemployment rate, GDP per capita.
Well, but they're basic.
All of those basic ones, but also some really, really quite niche ones, like the number of flights taken off every day in the UK.
Knife crime in Birmingham.
How
many weddings happened? Like really interesting stats. And this graph shows you 5 years of movement on it. So like you can see like all these different things that are going on.
It's just
and
fascinating
the movement
to have a look
over
at.
5 years.
Our favourite one so far, I think, the number of weddings, number of flights taken off every day in the UK, and also the average length of a children's book. Now, this was fascinating, wasn't it? What was the average length of a children's book? It was in the 1990s, it was up at was it 263 pages or something?
Yeah.
And now it's down to 90 pages.
A third of the size is the average length of a children's book.
Yeah. What does that tell us? I don't know what it tells us, but it's fascinating.
It either tells us that we are trying to save money by shrinkflation. It's a form of shrinkflation because it's cheaper to print a third of the book than it is to print the whole thing because of paper costs and everything else. Or it's an attention span thing. It's a deliberate choice that we want to give them shorter content, or God knows what it means. The one that I found interesting, which obviously is a big stat, but they put the two graphs next to each other, and I said to you, how can this be? And it was like government debt, and it showed in 5 years the government debt has gone from 2 trillion to 3.2 trillion. So it's like our government's borrowing is like basically gone up 55%, but our debt to GDP ratio has gone down from 98% to 96%. Pretty much the same. So given the economy's not grown, I said to you, how's that possible? And I said, it's the big conspiracy of inflation, isn't it? Because we've inflated away we've allowed us to borrow £1 trillion more, but our debt to GDP has not moved because our inflation's gone up by 50%. So therefore, we've inflated away our ability to borrow more money.
Yeah, I don't think that
is... It's a right old conspiracy, isn't it?
I don't think that is intentionally what the government is doing. I think it's just a nice side effect. Anyway, with the risk of digressing.
It's a very nice side effect, isn't it? Anyway.
If you fancy getting yourself a Times subscription, it's absolutely fascinating data.
Yeah, go and have a look at that. Thanks for joining us for another week's podcast. As always, if you feel like you might have outgrown your accountant, you can work with Claire and the team. Book a discovery call at profitcashgrowth.com. As always, rate, review and subscribe to the podcast. Hit the follow button on any of the apps where you listen. And as always, if you could share this with any business owning friends or people that you know that you think will get value from all of the evergreen content we put out every week, please do. And we'll see you again next week as usual.